Hello traders, my name is Logan with Funding Talent, and in today's video, we're going to be doing our market forecast for the first week of May. In this video, we're going to be highlighting the best fundamental drivers for you to stay away from, and also the best technical setups for you to incorporate in your own trading strategy and hopefully capitalize on. So, without any further delay, let's get right into the video. Hello traders, now we are going to start right off by getting into the fundamental drivers of this upcoming week. So for our fundamental drivers for this upcoming week, this week is NFP week. So be very, very careful on Friday. That is non-farm payroll for our newer traders. And it is a day where a lot of volatility can be expected to flood into the markets with the release of these news. So besides that, on Tuesday, we're starting the week off, so no news on Monday, 12:30 a.m. EST with some Australian dollar news, and then again at 6:45 p.m. Eastern Standard Time. Thursday, we have a lot of GBP news. All of it is happening at 7 a.m. And then, again, on Friday, some news 8:30 for the CAD and the US dollar. Stocks dropped from all-time highs as traders assessed corporate earnings, economic data showing potential inflation pressures, and hawkish remarks from the Federal Reserve official statement. The dollar also did rise this week, with personal income in the U.S. jumped 21.1% month over month in March of 2021, rebounding from a revised 7% drop in February and above market expectations of 20.3% gain. It is the biggest rise on record, reflecting an increase in government social benefits, as most of the Americans receive stimulus checks under the American Rescue Plan Act. So what this means is all of the people that live in America, all of the American citizens, are going to have a lot more disposable income to pump it back into the economy and help the recovery even more, which is fantastic. And this will actually translate into our risk on market sentiment. So for this week, we're going to be looking at a risk on market sentiment for that exact reason. You know, people have a lot more money than they had, as they just said, a 21.1% increase. And they're going to be wanting to put this money into different things, right? It could be investments, it could be consumeristic goods and services, but either way, this money is going to be reinvested back into the marketplace, the economy, and help businesses thrive more, and therefore push the economy higher, which people will be more interested in putting their money into riskier assets because there will be more safety in the overall economy because there's more money circulating, right? So this will play into our risk on market sentiment. For the people that do not know what that means, all that means is it's a fancy word for expectations are higher for further economic growth. And for our currency traders, that means that if this continues to play out, which it has the last couple of weeks, we can see some of the pairs, such as the New Zealand dollar, Canadian dollar, euro, pound, and Australian dollar, to appreciate. So we're looking at gold now. For the people that have been on this for the last couple of weeks, I'm not going to touch too much on this because if you want to know more about it, I've talked about it in the last probably 8 weeks. But we're looking long on gold. Ethereum, well, Ethereum is interesting, right? Because we're getting very close to the target zone, which I laid out for you guys last week. We were looking for head and shoulders in the 1 hour, but since then, that head and shoulders has been invalidated. So I can expect prices to go back, continue appreciating into our profit zone. Our profit zone is going to start at 2,830 and then move all the way up to a potential high of 3,180. So my bias, obviously, is going to be long on Ethereum. Same thing with Bitcoin. These are not exact price levels of this anticipation, but this is an idea of how we will see these waves play out, right? Because we have 3 distinct subwaves of a larger degree trend. So this is going to be a correction of our larger degree trend, and this correction plays out in a very similar way, right? So this is going to be 3 subdivisions of each wave. As you can see, we had our A, B, C, 3 subdivisions. A, B, looking to complete our C right now. I believe our target for that was 59,050. And we're looking to complete that now before we start another downtrend, possibly, right? If we break out higher, obviously this could have been the 4th wave, and then we're going to complete the 5th. But if we get a rejection from this level, this would be better for our long-term view on Bitcoin. XRPUSD, I really hope you guys got in on this. As of when we called that bottom around here, the 24th of April, around a week ago. And if you got in at that time, you would have been up roughly 50% of your portfolio, which is fantastic. I really hope you guys did take this trade because I know I did, and it's working out great. I still think this has a lot more room to go higher. NZDCAD, as you can see from last week, this smash take profit. Not really too much to talk about this, but this was our head and shoulders we identified, and it worked out phenomenally. So we talked about this quite a bit last week, right? Because we were at this level, and I said, okay, we can bounce off, we can play in between these 2 ranges here, the support fractal right here, and the resistance fractal. Or, what we can do is we can drop to a lower time frame, look for the breakout of this zone, right? So we got the breakout right here. And then if you remember from last week, what did I say? We're going to get a breakout, a retest, and then a move lower. And what happened? We got a breakout, a retest, and a move lower. And it's funny because you could have actually done the same thing on this breakout as well if you took an entry here and rode this lower. So this trade, we caught it. I hope you did because I talked about this in extreme detail last week. This worked out fantastic. So 2 trades so far that we just went over that have worked out great. 3 actually. So we were at this point in GBPCHF. And if you remember, we were around this consolidation here, which we were looking for a 3-wave subdivision to complete our correction, which we got here, our ABC, and then we got follow through. We called this out as well last week, hit take profit. If you were in this, I congratulate you. Fantastic trade yet again. This was fantastic. I know I caught this trade. This was one of my best trades in the last 2 weeks. And I called the whole thing out for you guys here. So right now, I'm going to be expecting price to maybe bounce off this level because as you can see, we're hitting this low right here. And then from there, we can expect to see prices maybe appreciate a little bit, but continue down lower because I can see that our C wave is going to end up in this profit zone a little bit lower, around 1.25 to 1.249. So we're going to keep our eye on that and maybe actually catch another move because what we can do is we can see a retracement bounce off this level, continuation pattern form, and then take down to our profit zone. So that's absolutely possible as well. My apologies, there is not too much to go over in terms of active trading decisions for early next week, but there was a lot of trades that folded out really well that I spoke about last week. So here is yet another one on AUDCAD, which worked out fantastic. We had our ABC WXY correction, and then we had our first wave down, and then our second wave, and then our third wave. We're still moving in our third wave, and I would have taken profits by now, so the take profit would have been hit at probably the low of this 5th wave, so just actually recently in this last 4-hour close. This trade worked out fantastic. CADCHF, another trade that worked out great. We had the bounce off of this zone right here, break out of this, which you could have played because we had a break and retest right here, and then a continuation move off. Fantastic plays all week. EURGBP, this is still setting up. I think that we could still move lower off of this. I did call this out last week, and nothing really happened. We're just pretty much consolidating. Let's wait for a breakout pattern and a continuation lower. EURGPY, you might have known I was looking to play this short, but we actually had an invalidation of this level at this point. But then we had it confirmed as we did see some consolidation around this level, proving that the level is still valid. So what we can see here, possibly, is a retest down to this level and then another move higher. If we don't see that, then what I can actually see more likely is a move down to these fib retracement levels, which obviously start right here at 130.12 and then move down lower to this level right here at 130.50. So we're going to keep our eye for this retracement and then a move lower off of these lower support fractal now. So traders, that was our market forecast for the first week of May. I hope that you took some valuable insights out of this video in terms of the fundamental drivers for you to avoid and also the best technical setups that we're eyeing up, and hopefully you are now too. If you're not already subscribed to all of our social media platforms, be sure to do so because we're releasing new content every single day across all of our various platforms, and we're releasing videos just like this every single Monday for you guys here on YouTube. So as always, on behalf from everyone at Funding Talent, happy trading.